This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. And welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is August 5th, 2020. This is show number 91. Well, Nick, we had a whole list of things to talk about, but in light of what's going on in the markets now, I think we should start with the metal sector, gold and silver. I mean, they are, if the stock market climbs on a wall of worry, then gold and silver climb a high rise of fear and panic, don't they?
Oh, they certainly do. Gold is just off the charts right now. You look at the GLD today, that's up $3.30. You look at gold futures, what can you say? I mean, we're now at $2,068, up about $47 on the day. And then silver, which has been really the outperformer, up another 4% today, trading over 27 an ounce in the futures. I mean, it's just an incredible run. And you know, I think in looking back now, you know, this is not over by any stretch, although it is very, very long in the tooth at this stage of the game and due for a pullback. But really just an incredible run, and it's just signaling if there's more central bank intervention, what's to come.
Yeah, that's a good question. And it seems like the appetite for the government to give money away and to print it up out of thin air and pass it out to everybody out there seems to know no bounds or limits anymore, Nick.
No, it's really true, and you see it in the dollar. The dollar has been falling. In fact, the dollar is down pretty sharply today, the U.S. dollar index. But the government just continues to think there's no problems with just, you know, coming up with $1 trillion here, $1 trillion there. If you go back and remember in 2007, 2008, when we had the so-called Great Recession and financial crisis, you know, we weren't even looking at $1 trillion bailout. Now we're just print trillions like it's a piece of cake. So, again, this is just sign of the times.
Yeah, well, if you remember back in 08 and 09, it turned out that the Fed bailed out banks, both domestic and foreign. They wrote checks literally for $16 trillion. If that's what happened back then, you can only imagine how large those checks are today. And of course, they're not going to tell you about it.
Yeah, we may not ever know, but I always find it rather interesting that central bankers buy gold and silver. So, you know, when we think about it, if that, you know, Ben Bernanke was once asked by Ron Paul, I think we spoke about this, where he said, why do you buy gold and silver if gold and silver are not money or not a currency? And he said, we do it out of tradition. And I just always knew that once I heard that statement, I said, I will never sell an ounce of my physical gold and silver. And thank goodness I never have.
Yeah, well, you kept it out of tradition, Nick.
Tradition,
the tradition that central banks are going to screw up. They're going to destroy the world. They're going to destroy the country. Governments are going to do it. Governments are going to default. The history of government defaults is so rich, Nick. It goes back hundreds of years. Basically, every government always defaults on its debt at one point or another. It always does.
I think it goes back thousands of years. In fact, you can just look and I'm not being a preacher here, but if you just go back and read the Old Testament, it always goes back to gold and silver. So again, you know, this is just, there's nothing new under the sun. We're just really seeing just massive money printing. And hence that's why the market's up and why I have been, you know, bullish the markets for as long as I have since March. So people, you know, thought I was crazy, but you know, now you go back and look. I mean, the markets are up again pretty sharply today.
Yeah, and yep. Okay, well, let's go down the normal stats. So we had the ADP Employment Change.
Yeah, we had the ADP Employment Change number, 167,000 versus an estimate of 1.6 million. So that was a huge miss. But last month's number was revised to 4.3 million. Compared to the number reported, which was 2.369 million. So that was a big revision. Now, this Friday, we're going to get the non-farm payroll report from the Bureau of Labor Statistics, and we'll see what they have to say. Again, I never really care about the number. All I care about is the reaction in the market, and I think that's what most people need to follow and watch. But that is pretty amazing to see the revision last month in the ADP job report.
Yeah, that's a huge number, and we know from prior experience that generally their report less prone to political shenanigans or chicanery, and generally is more accurate, I guess, right? Less political.
I think so, because these guys are actually the people that are printing payroll checks, so they have a better insight, in my opinion, than somebody doing a survey.
Yeah, I would think the surveys all, who the heck knows about the survey? But so we got 167,000, but effectively we got 2 million more jobs from last month. Pretty interesting. And I guess tomorrow, or Friday rather, we'll get the non-farm payroll results.
Yeah, so this Friday we'll get that non-farm payroll report, and we'll see how the market reacts, and we'll see what they say. Again, we do have a lot of states right now, still closing places down. We're not fully reopened yet. Now, if the economy gets fully reopened, then you get a lot more jobs going again. But we're seeing bars shut down again. We're seeing a lot of restaurants shut down again, and that's something that we know. Really, this is a service economy, so you have to take that into account.
Oh, for sure. And we've already been through the wisdom of doing these things, or the lack thereof. And certainly our leaders have failed us in this regard, major league, big time. But, I think by the end of August, probably be most of the way there. I can't say about schools. We know that keeping schools closed is the stupidest thing, because the kids have virtually no chance of getting it. In one state, a huge state, I don't remember which it was, doctor said there was one COVID death for somebody under 20. And that is a huge, the odds of that, it's like walking down the street and getting hit with construction debris and getting killed,
Yeah, it's really, the odds are very, very high that that's even going to happen. I think the schools personally should be open. I'm sending my kids back to school. And in Florida, I believe they're going to open. So, we'll see what happens around the country. But economically speaking, I don't think we've ever seen anything like this, where the world is shut down for a virus. And again, we just went about it the completely the wrong way. So, we'll see how this plays out. And again, we got a big election coming up as well. And, a lot of this stuff is all political as well.
Oh, yes. Politics is always at play, especially during an election year. We know that. So earnings season, stocks still coming out with some okay numbers, huh?
Yeah, I mean, today we had numbers from Disney. That stock's, flying high, trading at around $128 right now. That's up big from yesterday's close. And then you have some stocks that aren't doing so well, like Twilio, TWLO is a ticker symbol. That's a market leader. That stock today is down about 13 points, but it's been, into the stratosphere. So again, these stocks that are up and priced for perfection, they got to really, really, come out with some kind of blowout earnings report or something along those lines. Right now it's just a gradual sell-off in some of these market leaders. But I got to say, this earnings season has surprised me. The markets have held up really, really well. Some stocks have been clobbered. That happens every earnings season. But I've been particularly impressed by how well most of the leading stocks have held up. And that's important to follow.
Well, if we're going into this inflationary period where we're going to see higher interest rates, generally that affects the stock market in a negative way. But if there's going to be inflation, then people could easily just put their money into the stock market and perhaps real estate, but I don't know what that's going to do, but just in the hopes that they'll maintain some kind of purchasing power parity.
Yeah, I mean, we've seen that already starting, and I think people are starting to catch on to that. Just if you look at any of the metals or the base metals, not even precious metals, stocks like BHP Billiton, Rio Tinto, Southern Copper in general has been flying high. So we're seeing that. Even oil today. I mean, nobody's talking about it, but if you look at crude oil today, it's up $1.56, now at $43 a barrel. So again, you're seeing a lot of commodities starting to move higher. A lot of it is on the weaker dollar. Based off the weaker dollar, that certainly has helped. I don't think the dollar has a whole lot more to the downside, but people want tangible assets. Money managers, they want something that if they needed to grab it, they have something tangible. And that's why you see such a big move in gold and silver. Copper, aluminum is even making a move these days. So it's been rather amazing, but this is what's happening.
Yeah, when you see aluminum is a base metal, copper, somewhat of a base metal. We'll probably pretty soon start to see zinc and lead go up, and then you'll know that commodity price inflation is on the way.
That's a great point. I agree 100%.
So if we're going to make the inflation play, you think it's going to be the commodity stocks, the heavy cyclicals that really benefit here?
I do. And we're already seeing it. So, you wait on pullbacks of these things because they're up a lot. And then, that's an area where I'd continue to be interested in. I've had several plays myself already in the past month or so in Rio Tinto and Southern Copper. They played out nicely. Also had, call options in Freeport-McMoRan, another copper play. These things are all working. They're working today, and that's, where you want to focus, your time and energy on pullbacks. Those things, in my opinion, are viable.
All right. Well, it's getting interesting, Nick, and we'll see what gold does. At some point, it's going to get overextended. That's when the commercials rush in there to ruthlessly attack it. And just like you saw it going up $40, $50 in a day, you could see gold go down $100 in a day. Short pullback, violent though.
Yeah, it can do that, and it has done that in the past. So we have to, be prepared for that because it is very, very extended and overbought. But what you do now, if you happen to own it, the paper that is, if you own the physical, I would just sit long term. But if you own the paper and you want to trade it, now you put in a trailing stop and you just let it stop you out.
Yeah, I couldn't agree with you more. And, the mechanics of a trailing stop, I guess every brokerage firm out there has a different way of placing these trailing stops.
Yeah, they do. But how I always tell people to do it is really, really simple. If you just take a look, and we'll just use GLD since that's an ETF that everybody can follow. You just look at the last breakout point, which was around 185 for GLD, and you put your stop right below there. Because if it gets below that level, it's going to go lower.
All right. So look at the last breakout point and then put it just below it. And that's a great point because I never know, like some people say, use a 10% trailing stop. But you're in small stocks, they're highly volatile. That might not work so well. Well, 15, but 15 could be too much. But if you go back to the last breakout, at least you got a technical rationalization for why you're doing it, right?
Absolutely. And it's always about the technicals. You always want to look where the strength is. If something could put in a little base and go higher, that spot is where the institutional sponsorship was. That's where the institutions defend in equity. So that's what you want to protect and defend against. And
that's where probably you try to avoid round numbers like 185 because you know that that's where the big guys like to trigger those stops, right?
Yeah, that's why you put it just below that. And again, you just wait on close. If it closes below there, then you move out.
All right. I like that. It's simple and it's powerful. And the great thing is you get to preserve your gains because it's so easy when things go up this quickly, Nick, to see them go down even quicker, right?
Oh, when you see parabolic moves, you got to be prepared that you're going to get a snapback the other way, and it's going to be just as powerful on the other direction.
All right. By the way, I didn't tell you, but we're starting a couple of proprietary indices here. I'm in the process now of trademarking them and copywriting them. Number one is the Tesla to gold ratio, and number two is the Tesla to silver ratio.
Excellent. I like it. I like it. I like it.
All right. Well, hey, you'll be seeing it soon. They'll be quoting it all over, and you'll know where it came from, right?
I will.
All right. Hey, any questions or comments, KL@KerryLutz.com. Go to inthemoneystocks.com. Check out Nick's extensive positive trading record and lots of other valuable info there. Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Nick, we will pick up tomorrow, and exciting times here.
Certainly is. Thank you, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.